Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance understand the different paths in the world of finance and help them find which path interests them the most. Our esteemed guest today is DeWayne Chin. Mr. Chin has been the managing director and head of asset management for the Specialty Finance Business at Fortress Investments since 2006. Prior to this, he was on the residential mortgage whole loan trading team and joint venture team from 2004 to 2006. Before his career in finance, Mr. Chin was a lawyer for various companies such as insurance firms like Liberty Mutual, MagnaCare, and General Health Incorporated. Launched in 1998, Fortress is one of the largest global investment management companies. It focuses on investments in private equity, credit, and real estate for both individuals and institutional investors with $48 billion of assets under management. I hope you enjoy our conversation with Mr. Chin. Mr. Chin, thank you for joining us today. It is a pleasure to have you on the show.
Thanks for having me.
Let's start at the very beginning. Take me all the way back to your upbringing and give us insight as to what your life was like when you were younger. Where did you grow up? What were your favorite subjects in school? And what were some of your hobbies?
Sure. I was born in the Bronx, lived there until I was about 5 or 6, had an older brother and my parents. We moved to Queens at that time. Lived in I would say, working class neighborhood. At the time, my parents, my dad did a little college but didn't finish college. My mom actually had dropped out of high school to get married and eventually got her GED. And then later on in life, while I was in high school, she got her college degree and then her master's when we had the same graduation. I graduated from college and she got her master's. So what I would say is the people around me, for the most part, didn't necessarily have professional careers. Like, I knew nothing about finance when I was growing up. It was the kind of thing, and, a Chinese family, they said to my brother, all right, you'll be the doctor, and they said to me, you'll be the lawyer. My brother's not a doctor. And even when you said that, I didn't know what my options were in life, and I really didn't have a lot of examples. I had one uncle, really a cousin, who was a lawyer. And had I known the level he was at, he graduated #1 at NYU. Wow. He went to Stuyvesant. He went at 16. He graduated high school. He went to RPI, got an engineering degree. Then he got his MBA, and then he went to NYU, was #1 in law. And if you imagine at this time, this was a long time ago. He was as a Chinese American being able to do that when he probably was the only Chinese person in his class. Or only Asian in his class, maybe. He was an impressive guy. But that was kind of like a pipe dream. So all I knew, doctor, lawyer, but the people around me, like in my neighborhood, firemen, police officers, teachers, and then people who weren't doing as well as that. So, very basic upbringing, but never knew there was another world out there. I had a great upbringing. Favorite subjects, always history and English. Nothing to do with numbers. Always loved history, and I was a pretty good writer, so English was always, interesting to me. And then hobbies were just sports. My brother and I were both pretty good athletes. We both played football and baseball in high school, and then at pretty competitive schools, athletically competitive schools. And then I went to play in college, never played, got hurt, and that was it. Like, for my father, that was the pipe dream, to come to the United States. My father came over from China. My mom grew up very poor. She was born here, half Chinese, half white, but she grew up very poor in Washington Heights, and like the Washington Heights, Harlem area. So for my parents, or especially my father as a Chinese immigrant, his idea of what the American success story is, you play baseball and you get a college degree, and for me it was law. My brother was told he was a doctor, and that was kind of it.
So like a directed focus towards those two fields.
Yeah, with no guided path on how I was actually going to get there. And what I would say is there wasn't a lot in my house. There wasn't a lot of pressure, meaning that my brother and I both did well in school, but there was never a lot of pressure on, you have to do better. You have to do better. And even going to college, it was never like really a pressure to go to college. That was my next path. So I just took that next step.
So speaking about college, for undergraduate school, you attended the University of Connecticut, and then after you attended the University of Albany, and then Brooklyn Law School. What was law school like, and what sparked your interest in law?
Interest, or I was told I was going. So as I said, just going back to college, you understand, I went to University of Connecticut because they recruited me for baseball. And then when I didn't play baseball, I decided to go to a New York school. And law school, was kind of the next step, but even I took a year off between college and law school just to earn some money and kind of see what the world was like, but I knew I was going to go to law school. Law school was exactly what you hear about it. The first year, extremely intense. I feel like it must be like what, basic training is in the Marines or in any military. The idea is to break you down and then build you up. And that's kind of what they do in law school. So for example, most of the reading you do are cases, old legal cases. And, how long does it take to read 10 pages? It's pretty quick. But all of a sudden, these cases, to read 10 pages, it's an hour to read the 10 pages, to try to dissect it and figure it out, or more. And, you just feel like you're beaten up. Maybe you're not doing as well as you are, as you think you should be. Honestly, I remember my first law school final, and I had worked really hard. A lot of law school finals are fact patterns, and then they ask you, questions from that. So I had this long, detailed fact pattern for torts. I read it through once, extremely complicated. And then I sat there and I said to myself, if I walk out now, just never come back, would that be the right thing to do? Because that's what I feel like doing. And then, of course, I decided I would read it through again and then take the test. I really enjoyed law school. It's a phenomenal education in that it really trains you to think, how to break down issues or break down problems. And basically, as I said, they break you down and then build you up. And there's almost like a brainwashing. There's a basic thing on how you read cases. They call it IRAC: issue, rule, application, conclusion. So every problem that comes, in a legal case, that's how you address it. All right, what's the issue? What's the rule to be applied? How do you apply it? What's the conclusion you come to? It's kind of how you can deal with life.
So very strenuous work in that first year, but persevered through it.
Yes. And then after that, I have to say it's pretty enjoyable. Not because there's a lot less work, but you learn to look at things differently, and it comes a lot easier, and it becomes very interesting. And I think everybody develops, or most people develop, those skills. And I was lucky. I went to a law school that's pretty collaborative, so it was a good environment to be at.
Sounds great. And then, so after graduating, you worked for some big companies such as Liberty Mutual Insurance, MagnaCare, and Group Health Incorporated. What law did you practice there?
Well, at those, Liberty Mutual, once again, I take a little step back. So my first job out of law school, going back to law school, what I really wanted to do, and I decided this, I think, in my second year of law school, that this was my path, and my dream job was to be a public defender. Now, public defender is when a person is accused of a crime and they can't afford an attorney, the courts appoint an attorney to represent them. So basically, that's what I wanted to do. I wanted to defend the rights of people accused of crimes. And why? Because I thought a lot of people were treated unfairly in the justice system for many, many reasons. And most of the world doesn't want to defend people or represent people who are accused of crimes, whatever the crimes might be. And I thought this would be a noble thing to do. I thought it would be exciting. I thought it'd be interesting. And I got a job in New York City, in Manhattan, doing that work. And I did enjoy it. I can tell you the stories were better than any stories when you're at a party with people or in a social interaction. My stories were better than other lawyers' stories as far as being interesting. But at some point, I got burnt out because it takes that. So I was working during the crack epidemic and at the time the AIDS epidemic, which were all intertwined with, especially in impoverished neighborhoods. And, crime is tied with drug addiction. All those things are tied together. And at some point, it just really kind of drains you. And I needed something different. So I left there and took the first job I could, which was as a trial attorney at Liberty Mutual. So Liberty Mutual, you have insurance, you get this is the basic idea of it. You get into a car accident. The person you hit sues you. Your insurer is Liberty Mutual. They bring in their attorney to represent you in that case. And that's what I did for Liberty Mutual. And the funny thing was, I found out that the cleanest law that I would ever practice was criminal law, which everybody would think would be dirty, but everybody knew what side they were on. But once you bring in money, you're with co-defendants, you're with plaintiffs, and it kind of dirties things up. And the work just wasn't that interesting. Oddly enough, my office made it legal aid. We became very good friends, and we would help each other out. Like, oh my God, this job is interesting. If you're interested. And he ended up working at a managed care organization called MagnaCare. He ended up being the chief operating officer there, and he knew that what I started seeing at practicing law was I was after Liberty Mutual, I was at a law firm, and it was a pretty good job. And it was one of the better firms. And after about a year, I said to myself, all right, in 10 years, if I'm in that corner office, is that going to be good enough? Am I going to be happy? And I realized at that point that I don't want to practice law anymore. And he called me up one day and he said, I have an opening. You could use your legal skills, but it's really not a legal job. And I took the chance. Pay-wise, it might have been a little less than I was making. But I thought it was an opportunity that was interesting and it would take me in a different path. I went there and it was, kind of a small organization. I didn't start out as a general counsel, but I ended up being the general counsel of the company. But I was also involved in kind of building the network of providers and hospitals, which involved a lot of negotiating, contracting. And at GC, there was a lot of regulatory work. So that would all tie in later to, what I was doing in finance. But healthcare law, regulatory law, those are some of the things I was doing. Contract negotiations, that was it.
Yeah, the public defender part, it's a really great motivation to do something that feels rewarding.
No doubt. And, when you're there and you're with like-minded people, you're all young, you're all gung-ho, you all have the same mindset, it's a phenomenal place to work. And the world, you fight with, the prosecutors, you fight with the court employees, the court officers, you fight with the judges, and you also fight with your clients because your clients don't trust you. They think you're going to railroad them. You fight with their families, if the families even show up. It's an interesting place. And so, like I said, my office mate, oddly enough, we ended up going down the same path. He ran a very similar business to mine at a major fund. at some point, and we ended up in the same places. So I still do business with him.
Oh,
Yeah,
great friendship, still lasting.
we used to share a probably 10 by 10 office with mice running around and roaches. It was not glamorous at all, but we just loved it. We didn't know once again, we didn't know anything more at the time. So.
I had a question. Within the different laws that you practiced, was there any crossover in financial fields?
Not really. The only thing that I used later on was a lot of the regulatory work and kind of how you approach it and how you think about it. But for the most part, no.
I see. And you had mentioned before, you were a public defender, helping people who had been accused of crimes. And then you went to Liberty Mutual and were defending people in accidents. So lawyers play so many pivotal roles in several different capacities, whether that be, as we previously mentioned, or governments, nonprofits, corporations. How does law fit into so many different categories?
There's always a legal aspect. But also, this like I said before, the skills that you get from a legal education, I really feel like there's no other that does that. And not only for the field, the legal field, but for business, for life. It's just really a wonderful education.
Do you mind expanding on some of those skills that you would say really helped you throughout, life in general, per se?
Yeah, look, that first year is a tough year. I don't know anybody except for maybe the most brilliant people, and even them, but the work is hard, right? And you have to be disciplined. You have to work really hard, and you just have to plug away. I used to commute an hour and a half bus and then 2 subways to law school, and then at night I'd probably get to law school. I leave my house, let's say 8:30, and then I had to get back out of the subway to the bus by 11:30 at night, or I'd miss that bus, and then I'd have to wait an hour. But those were the hours I put in my first year. So I'd be home after midnight, and then I'd do it all over again the next day. So that kind of discipline and hard work, putting it in, that just applies to life. And then, just the skill set, developing how to think, how to approach things, in this methodical way. I think that helps, whether it's, finance, whether it's life, all those things.
That's some true dedication putting in there. Getting home that late, having to go back at it again in the morning.
Well, what I would say is, if you're interested in finance and you're lucky enough or unlucky enough to get an analyst position at an investment bank, well, that's kind of what you're doing.
It's long hours. Well, in 2001, you joined Franklin Credit Management Corporation, a small specialty finance company. How did you get exposed to aspects of business and finance in your stint here? Was it the first time you were exposed to finance?
Yeah, I would say so. So once again, by that time, my old office mate, he was the CEO of the company, and he gave me a call, and he said, I need someone to help me that I could trust. And that's always important in business. Sometimes, you need people who are going to be honest with you, give you straight talk. And he asked me if I would join the company. He said, it's back to a legal position, which was general counsel. He goes, but over time, I want you to really understand the business and then take on what you can. So I went there as general counsel, but it was a fairly small company, so I was allowed to get involved in all aspects of the business. And over time, I ran their servicing operation. So what Franklin Credit did was they bought pools of residential mortgage loans, and then they had an in-house servicing department that would board those new loans. They would do customer service. They would collect on the loans. So I basically managed that whole area of the business along with the legal aspect of it. So it was very interesting. I got to learn, about managing vendors that the company used, collateral agents. It really ran the gamut. But it gave me a tremendous amount of experience, and it's a term that they use. It allowed me to be a good athlete within that type of business. So it was a great experience.
So it helped you understand the landscape and get exposed to it.
Yeah, and sometimes when you're at a really big place, the job functions are really segmented. Mm-hmm. Here, there was a lot of overlap of everything, and I was just allowed to do as much as I could take on. And that's what I did, really diving in, because there was a lot that I didn't know. I never, I never denied knowing that it was all new to me. But what I tried to do was really learn as much as I could from the people that did know. You throw your ego out the door, and you just go in, with an open mindset. And once again, you just work really hard.
So you'd say this was a big turning point in your career?
Oh, absolutely. Absolutely.
So from practicing law, you decided to shift to finance when you joined Fortress Investments in 2004. What caused you specifically to shift into finance? Was it that stint at Franklin Credit Management that made you truly interested? And did you always want a career in finance deep down? And is this something usual that, from law to finance people do?
Oh, yeah. Well, what I would tell you is a lot of the people at Fortress who are on the finance side, there's a ton of them that started out as lawyers and crossed over. One of the things is when you're working in finance, you're you're your own captain, right? When you're in law, you're at a law firm, you're working for others in the sense that, all right, the client needs to close a deal by this time. You're at their whim. Finance was a little different. And I just knew, as I said before, I knew that law wasn't for me and I needed something different. Finance just, it was incredibly interesting. I saw a lot of opportunity and a lot of directions. And so when you learn all those different aspects, I was fortunate enough to be at a small company. It really allowed me to see a lot. And then I thought to myself, well, I'm still not sure what areas I want to go in, but hopefully, I can focus on a certain area and then be successful.
As you mentioned, it wasn't too unorthodox for lawyers to shift into finance, but is the shift easy per se?
I say for me, with my path is kind of unorthodox, so no. But I think for a lot of lawyers, say for example, who are working on business transactions with financial, with hedge funds or other financial institutions, I think it's much easier because they know the basics, they know structure, they know the contracts. For me, it was all kind of new, like when I went to Franklin Credit and to some extent, but like I said before, you need to just go in with an open mind and just work really hard.
So initially you started out in the mortgage business at Fortress. First off, do you mind giving a brief explanation of what a mortgage is?
Sure. A mortgage loan is basically generally when someone buys real estate and gets a loan to finance that transaction. And there's residential mortgage loans or just other mortgage loans for other property, maybe on a commercial level. But let's take a residential mortgage loan. I buy a house. I don't have enough money to put, for the whole purchase price. I put down, let's say, for example, 20%, and the bank gives me the loan for the rest. The bank, for security, puts a lien on my property, and basically that's their collateral. So if I fail to make those payments, they have the ability to take my home.
I see. So they provide you with assistance until you can fully pay that money, but they get interest back?
They get interest on the loan itself, paying interest as in principal and interest, but then they also have an interest in the property. So, for example, if I tried to sell my property, I wouldn't be able to because on the title, the bank is on that has basically a lien or an economic interest or an interest in that property.
I see. That makes sense. So because that's used as the collateral.
Yes.
What did you do while you were on the residential mortgage whole loan team?
Sure. As I said, I was involved in a lot of the operations at Franklin Credit. So Fortress at the time was building their residential mortgage whole loan team, which was buying pools of loans, very similar to what they're doing at Franklin Credit, but they had a small team. They had a trader and two analysts. And the issue was that traders will look to put on deals. They look to find deals, they look to close those deals, and then they look to do the next deal. But at Fortress, we think it's very important, or the most important deal is the deal you put on the books. So I was kind of brought in to kind of manage the operations of that business in a sense. So I was involved in due diligence pre-closing. I would look at who we look to have to service the loans. I would do the diligence on them. I would do the diligence on the originators of the loans that we were looking to purchase. I would do diligence on the vendors. I would help with the document negotiation, once again, bringing in my legal skills. And then after it closed, I was responsible essentially to make sure that the servicer was doing what they were supposed to do, that the performance of the loans was in accordance with, in line with what we underwrote when we looked at the loans. So I did all those things. So I wasn't sourcing transactions. I wasn't necessarily structuring them, but I was involved in all aspects, in the pre-closing and post-closing. And then it was really managing the investments that were on the books.
I see. And although you joined a different team shortly before the 2008 financial crisis, would you please explain to our listeners what was the 2008 financial crisis and why it happened?
I could do that. It'd be a very long discussion. I'll try my best to give an overview of what essentially happened. I think, post the dot-com bubble, that was around 2000, and then followed by 9/11. They looked to kind of give a boost to the economy, dropped interest rates, kind of lightened up on regulation so that the banks would lend and push money into the economy. And I think over time, it really activated the economy and did the things that it was supposed to do. But in some ways, it was almost, if you think about it, like it was an inferno. And it led to a number of things that created a housing bubble that eventually burst. And, that was in the U.S., and it had, I wouldn't say ripple, I would say tidal wave effects on the whole global economy. So if you think about what happened was, there was, people started taking much more and more risk in these, in originating mortgage loans, right? So they started providing mortgage loans to a lot more subprime borrowers, with lesser credit than normally would be the case. And, also less documentation, all those things that you would normally need, to show that you should get a mortgage loan. So there were much more risky mortgage loans out there, but the originators were originating as much as they could. Investment banks and other investors were buying these mortgages. They were buying them, and they would package them up in what's called mortgage-backed securities. And then it really started driving real estate up. The problem is that there was very little cushion between what it was being sold for and what the true risk was. So eventually, the housing market started to dip. And then you had all these people who couldn't necessarily afford their mortgage loans. Their homes were originally valued at one level and now dropped significantly, and they couldn't pay for their mortgage loans. And then whoever the lenders were started to lose money. And then, so whoever owned the loans started losing money. So in these mortgage-backed securities, it kind of created this, this trickle-down effect, and trickle's the wrong word, of course, where liquidity in the market just dried up. So normally, you could, if I had a loan, a mortgage loan, and it was an adjustable mortgage loan, meaning that it wasn't a fixed interest rate, over time, interest rates would go up. So at some point, interest rates started to go up, and now my payment was significantly higher than it used to be. I'm a subprime borrower. I really can't afford that bump up. So what might I do? In the old days, before rates had gone up, I would just refinance it, at a lower rate. All of a sudden, I couldn't do that. This created a bubble where then you had houses being foreclosed on, prices went down, and then everybody started losing money. The people who invested in those mortgage-backed securities, their lenders, they often got leverage on their investments. Same thing with the originators. And then eventually you had the major bankruptcies. Bear Stearns, two of their funds stopped allowing redemptions, eventually went out of business, Lehman Brothers, and then you needed the government to come in and basically save the day. So, and that happened all around the world as a result of the U.S. housing crash.
I see. And you mentioned a term there, refinancing. What does that mean? Just like a small, brief explanation.
Sure. Let's say, for example, I get a loan, a mortgage loan like we talked about, and it's at 5%, right? And over time, so I'm paying a certain amount each month. And then all of a sudden, let's say 10 years down, rates drop to 2%. Well, I can take out another mortgage loan, basically to pay off my loan. I could refinance it, but now instead of paying 5%, I'm paying 2%. So I've lowered my amount. Over that time, I've built equity, into my loan, meaning that I paid my loan down, so I own more of the house, basically. That's what a refinancing is. And that's another thing that happened. You just weren't able to refinance at a certain point because all the lenders stopped lending. Liquidity dried up. And it was, let me tell you, it was a terrible time.
And it's because they couldn't take the houses back. Well, the house prices dropped, so that collateral became less valuable.
Exactly. And then basically they were losing money. And the other thing was, as I said, regulation was loosened to try to stimulate the economy early on. And the amount of capital that banks, investment banks, were required to hold, if they had losses, they'd be able to pay back their investors. That was no longer necessarily required at the same levels. And that's one of the reasons that you had these bankruptcies.
I see. So very complex sort of reasoning.
I feel like I was rambling a little, but it is so complex, yet at the same time, really should have been seen. So for example, let's say, if you do it right, like subprime lending can be done right. You just have to understand the risk. And usually, so for example, if I'm lending at a loan to value, meaning let's say at $100,000, a house worth $100,000. Do I want to give this guy $100,000? That's too risky. That's 100% loan to value or LTV. Normally, maybe you give 65% to a subprime borrower. But what was happening, because lending was at such a frenzy, people were getting close to 100% loan to value from lenders. And just think, If you don't have any cushion, if there's a drop in the value of your real estate, you're in big trouble. And that's really basically what happened. To do it the right way, you need a lot of discipline, right? And part of the problem is people were chasing yield, they were chasing greed, and they were getting undisciplined. But the whole world was doing it. Very few people didn't. And obviously, we paid the price.
Yeah, as seen. But at least in 2006, you switched fields and became the managing director and head of asset management for the Specialty Finance Business. Do you mind explaining, please, what is specialty finance and what's private credit?
Yeah, specialty finance is a type of private credit. Private credit is essentially non-bank lending. Oftentimes it's done, it could be, you could be lending to consumers, you could be lending to small business and small and middle market businesses. But it's just non-bank lending essentially. Now, specialty finance, traditionally, it's easy to understand by giving examples of it. On the consumer side, it could be consumer loans, unsecured consumer loans, auto loans, and at all different credit tiers. Oftentimes, small business loans, and also in non-loan transactions also that are really financing transactions. It really runs the gamut. But just think of non-bank lending, and that, for both of those questions, private credit and specialty finance.
And what does your typical day entail now?
Sure. So the easy thing to understand is, we have a specialty finance team, and there's two sides of it. One is the origination side, and one's the asset management side. So if you want it in black and white, the originators source, they structure, they negotiate, and they close the investment. Asset management then takes that investment and basically ensures and monitors the investment to make sure that the borrower is doing all the things it's supposed to do, that the underlying collateral is performing within, our projections and underwriting, and basically just making sure, and we like to think in a proactive way versus a reactive way, that the investment is performing in line with our projected underwriting.
I see. And how have you seen your day change in your field over the past 15, 20 years?
That's a good question. I think, it's just really managing a bigger business, trying to figure out ways to create efficiencies in that business, whether it's through, technology, whether it's, building skill sets within the team, maybe bringing in different skill sets than we currently have. But I would say right now, the hope is that through technology, we can figure out how to do things better. Specialty finance is a very high-touch business within the finance world, in my mind, to do it right. We talked about being disciplined. We've had a very disciplined approach, which I think has resulted in us having a team that's been in business for, 18 years together. And one of the things we're proud of is that the core people on our team have literally been together those 18 years. So it hasn't changed that much in the sense of we do the very unsexy work of ticking and tying and making sure that all the things that we projected in underwriting continue to occur. And if things go wrong, we try to see it ahead of time and plan for it. And the good thing is that over all this time, and so everything from the financial crisis to the fintech boom where things just seem to be rosy forever, the pandemic, we've learned a lot. And you learn those lessons and then you apply them.
So you can adapt based on that.
Absolutely.
And do you mind giving an example of specialty finance in action?
Sure. So to really understand kind of how specialty finance works, I go into a car dealership, and let's understand easy numbers. It's easy to give easy numbers. Let's say I see a car for $1,000. I don't have $1,000, so I'm going to try to get a car loan. I'll have to put down $200, and then the dealer goes, I have an auto lender. They'll give you a loan. You put your 20% down, $200. The lender will give $800 back. They'll give you $800, and we'll have the $1,000. You pay the dealer. So the lender starts getting payments, right? That's principal payments plus interest, whatever the interest rate is on the loan. And let's say the borrower, or let's say I default on my loan. The way it works is usually within 60 days, they'll send out a repo agent to pick up your car. And then once they have possession of your car, they put it to auction. And let's say they get $900 back. Well, the person who loses first, so the person who gets paid first is the lender. They get $800, they're paid off, right? And then plus any expenses that might have taken, to pay the repo agent, to pay the auction, those things. And then whatever's left over, maybe the person gets. But now I'm an auto lender. That's the auto loan transaction takes place. Now I'm an auto lender. I want to make 1,000 of those loans, right? I find a lender to lend to me. That would be someone like me. Now, if you take that $1,000, I say, all right, the consumer still needs 20% down. You're going to give him 80%. Well, maybe based on the risk of your portfolio of loans, your pool of loans, and the customers that you lend to, I'm going to give you 80 cents on the dollar. So in that $1,000 loan, the consumer pays $200. Normally, the lender will give $800, but he gets a lender that gives him 80% of that. So as the lender to the lender, or lender to the specialty finance company, who is the auto lender, I give $640. But now take that repo transaction, right? $900. Now I get paid first. $640. Then if there's money left over, the specialty finance auto lender gets it. And then if there's any money left over, then the consumer will get it. Usually, there's no money left over.
So you are the lender to the lender.
Correct.
I see. So finance is a demanding field, but on a lighter note, how do you spend your free time?
Well, the two kind of hobbies that I have, when I had time, like I have a little more time now. When I was younger, I didn't. But, at some point, growing up as an athlete, I always liked to be in shape. And over the years, you get out of shape. And then I basically got back to it at some point in time. And what I do is, try to stay in shape. So one thing I realized was I could never work out after work. I was too exhausted. So over a period of time, I started working out before work, and I got other people to work out with me. So basically in a schoolyard, at one point for many years, we'd go into a schoolyard at 5:30 in the morning. We do it 4 days a week, and I would run the workout. And I did a CrossFit workout. I was CrossFit certified. Also at that time, probably over many years, I was involved in martial arts, still involved. At this point, I probably started like all the kids do in karate or kung fu and those things. But in law school, I boxed. And then later on, I did Muay Thai. And then when I got too old to move out of the way of punches and kicks, I got involved in Brazilian Jiu-Jitsu, which I still do. Not as much as I should, but the young guys are getting too fast for me, so I don't do as much. But I still do it at some. So trying to stay in shape is what I do.
Wow, that's a great goal. And must be refreshing, too, to do that in the morning.
Yeah. And if you don't do it in the morning, you don't do it. That's the reality of it.
So now for the question I ask every guest on my podcast. For kids in high school and college looking to enter the world of finance, what advice would you have for them?
Well, what I would say is you have to start early to get ahead. So, there was a time when you could figure out that, I want to do finance, in your junior year, and you could still try to find a job. Now it's much tougher. I think, if you want to get one of those, those very exclusive investment bank analyst positions, you probably need to make that decision probably in your sophomore year. So it's a lot less time, which I don't think is great, but that's just the way it is. But if you want to get into finance, the one skill that they don't really teach in college that will make you a superstar is learn Excel. If you know how to use Excel really well and then start having the ability to do financial modeling, that's a way to get ahead. I'm always amazed that Excel isn't really taught in college at a high level. And when I talk to guys who are really good, and it's usually young guys, how'd you learn to, really be, such an expert at Excel? And it's just on the job. So that means in their first year or two as an analyst at some investment bank, they're really honing their skills. A way to get ahead, be good at Excel. Take courses in Excel. There's plenty of them. And there's plenty now that are geared towards the street. It's a mystery to me why, if you're a business major, finance major, they don't have complex, basically, just like teaching a language, because that's really what it is. Level 1, level 2, So, but at the end of the day, hard work, which is really a life lesson, it's all about hard work. You can't be successful in finance without putting in the work. First one in, last one out, and quality work in between. There's no such thing as really learning and diving in remotely. I know people will tell you otherwise, but there's certain things you could do remotely just as well. But you can't be on a trading desk and really learn from the mentors around you and build that relationship. And that's all part of the business. Those are the things that young people should know, and when you go in there, be humble. It's all the lessons that you should know in life. Your word is your bond. Never break it. Hard work. And then, just like in a fight, if you're competing, especially in finance, if you're competing on a deal, go down swinging until you can't swing anymore. And that's what it's about.
Well, thank you so much for describing your interesting career path and providing us with this enlightening advice.
Well, thanks for having me.
I really appreciate you on the show.
It was a pleasure.